Global equities and U.S. Treasury yields were lower on Wednesday after minutes of the Federal Reserve's last meeting showed that officials favored a moderation in the pace of interest rate hikes as inflation begins to recede. A solid majority of Fed policymakers agreed that it was appropriate for the central bank to raise rates by 25 basis points, even as they reiterated that the inflation outlook would keep driving further rate actions, the minutes showed. Only a few officials supported a rate hike of 50 basis points. The minutes from the January 31st to February 1st meeting preceded recent strong economic data that demonstrated the resilience of the U.S. economy and heightened worries of a longer rate tightening cycle. The minutes are a little bit outdated because of the data that came out after the Fed discussion, and it's not as important as people think, said Mustafa Mauna, portfolio manager at James Investments in Dayton, Ohio. The MSCI World Equity Index, .MUD0000+, which tracks shares in 50 countries, was down 0.51%. European stocks, .Stocks, shed 0.33%. Wall Street stocks finished a choppy session lower following the Fed's minutes. The Dow Jones Industrial Average, DJI, fell 0.26% to 33,045.09, the S&P 500, .SPX, lost 0.16% to 3,991.05 and the Nasdaq Composite, .IXIC, added 0.13% to 11,507.07. U.S. Treasury yields retreated after surging to 3-month highs. Benchmark 10-year yields made gains but were still lower at 3.9175% after the release of the minutes. The bond market has already priced in more rate hikes, but the stock market hasn't repriced to reflect all of the movement in the rates, Mauna added. St. Louis Fed President James Bullard, a non-voting member of the Fed's rate-setting committee this year, on Wednesday reiterated his view that a Fed policy rate in the range of 5.25% to 5.5% would be adequate to bring inflation toward the central bank's 2% goal. The U.S. Treasury yield curve that measures the gap between yields on 2- and 10-year Treasury notes, seen as an indicator of economic expectations, remained deeply inverted at -77.40 basis points. If the most hawkish guy, who is a non-voting member, is at a 75 basis point hike, then maybe the consensus is 50 basis points, and that is a little lower than the market, said Thomas Hayes, chairman at Great Hill Capital in New York. The US dollar gained due to the unexpected strength of the American economy revealed in recent economic data, notwithstanding interest rate hikes by the Fed. The dollar index rose 0.374%, while the euro down 0.42% to $1.0601. Oil prices fell 2% on growing concerns over oil demand as the Fed aims to keep hiking rates to reduce surging consumer prices. Brent crude futures settled 3% lower at $80.60 per barrel. The West Texas Intermediate crude futures, WTI, 3% to end at $74.05 a barrel. Gold prices fell as the US dollar gained. Spot gold dropped 0.5% to $1,825.60 an ounce, while US gold futures fell 0.43% to $1,825.10 an ounce.